JC Parets, how you doing today? Thanks for joining us. Dennis and I just got a little bit excited here. Lumber liquidators. Stock is getting killed today, JC. I know you've said hands off on it before, but is it attracting your interest now?
Nah, I mean, there's no reason to be in this. There's just too much risk. Like, what are you going to do? You're going to, if you're going to be in something like this, you got to be in the premium. You got to be in the calls because, today's a great example. You wake up and this thing's down 20% pre-market. So, it's not really, it's not really something that I like, particularly because it's so difficult to manage risk. And at the end of the day, that's all that matters. It's not about, making money or finding the next monster. It's about protecting the downside for when you're wrong. I think it's just too difficult to do that with this.
Okay. All right. Let's just go to the market here, folks. We're on the phone with J.C. Parets. He's the founder of Eagle Bay Capital. He's a veteran of the markets, very diligent with his chart work. Run up and, you've been bullish. We ran up. We made new all-time highs. Sniffed it yesterday. What do you make of the really extremely tight ranges in the S&Ps over the last 3-4 sessions?
The last 3-4 sessions has been awfully tight, but I mean, you can even take it back to February. We've been in a pretty tight range here for a while. Which might be frustrating those people that trade the averages. A smart guy once told me, if you trade the averages, you get average returns. Underneath the surface, as we've discussed here week after week, there's been a ton of sector rotation, a ton. And there's been a lot of money that's been made in individual sectors that hasn't necessarily been seen in the averages. Dispersion is, what we like to call that, in between, different stocks and sectors. But so overall, although it may seem frustrating on the surface, because of the sector rotation underneath, I think it's healthy. And I think we're poised for higher levels in the U.S. averages.
JC, what about the airlines here yesterday? You talked about sector rotation. Everybody was rotating out of this sector there yesterday. I have not seen the airlines get killed like that really since a terrorist attack. That was an absolutely incredible fall there for all of these airline stocks across the board. LUV, American Airlines, UAL, dumping 10 to 15% there yesterday. What are your thoughts on this sector?
Yeah, I think you got to buy them here. As long as we're, I like to look at XAL,
okay.
X-Ray Apple Larry, which is the Amex Airline Index. As long as that holds above, 94.5, 95, I think you got to own these things. I think you buy these dips. I think transport as a group are a buy. We're long. We bought the transports yesterday. We had already started dipping our toe in last week. Rolled those profits into out of the money calls, or actually in the money calls. Now they're out of the money. And then we bought back the Carmen yesterday. I like it. I think we go higher. In terms of the transports, you want to look at those lows from early April. Those lows from early April start getting taken out. That's going to be a problem, and we'll start getting a lot more defensive. And then on the flip side, if the transports take out the highs from this week, I think we could see a monster rally. So although we did start buying the common stock back yesterday, I would really be pressing this if we took out the highs of the week.
What other sectors are you talked about sector rotation here. I noticed the financials are catching a bit a few days ago there. What other sectors are you watching here as this money has rotated out of airlines, rotated out of oil a little bit in the last couple of days? What's been getting the money here the last couple of days?
I'm not convinced about the financials. I'm really not. They're still a serial underperformer. All these things do for the last 2 years is underperform. Look at any of these averages compared to the S&P 500. They're all in downtrend. So I'm not, pounding the table on financials just yet. I don't trust them. I think rates. I think interest rates come down. So I think that with that. I think that some of the interest rate sensitive sectors can benefit from a decline in yields. I think yields could probably get back down under 2. Remember our upside target was 2.2, if you guys recall, which is why we were short Treasury bonds over the last couple of months. But our targets have been hit, and I think rates roll over. I think that's good for bonds, and it's also good for rate sensitive sectors we're in bonds. We bought bonds very aggressively.
So you're not believing this move in the TLT then here, this strong down move. You think rates not only are not going up, you think I don't know how much lower they can go here. So you're back on the bond bull wagon here after these things have gotten killed, huh?
Yeah, I mean, I don't want to say I don't believe what happened in bonds. I absolutely believe it. We were short. I mean, we couldn't be happier with what just happened in bonds. I mean, this was, really, really, made our April and then May for sure, the short Treasury bond trade. But, our targets have been hit. How much lower can yields go? They can go a lot lower. They were, in 2012, they were at 1.4. We're at, 2.4. So how much lower can they go? They can go a lot lower. As long as you ignore economists, you're going to be, one step ahead of the game. They keep getting it wrong, obviously. Yesterday, we were told that, now June rate hikes are off the table. The market's been telling us June rate hikes have been off the table all year. June rate hikes were never on the table. So, if you listen to economists, you're way late on the game. If you're focused on the Fed Fund futures, there was a 0% probability of a rate hike in June. After the Fed minutes, there was still a 0% probability of a rate hike. So this is nothing new. Again, just goes to show you, ignore the nonsense, the theoreticians, if you will, and focus on the market. Only price pays. That's the only thing that matters to us.
All right. Goldman Sachs made a big call on oil the other day, and market hung out there for a day and then kind of took it out. Bearish, very bearish. That's great. JC, he doesn't care what they say. He just trades his charts. But anyways, they do move.
Why would I care what Goldman Sachs thinks? I don't have time to worry about what they think.
I love that comment.
You probably don't even know the symbol of the stock.
No, he follows the stock.
Yeah, it's a Dow component. I know.
He follows the stock.
That's the only reason.
But he don't care what the analysts say. He cares what he thinks. That's awesome.
The day I start caring what the sell-side analysts think is the day that just put me out of my misery.
Because they all chase price. We were giving them heat earlier on the show. I'm not sure if you were listening, but they all, when you get NetApp get killed here this morning, you got every analyst downgrading the stock. They're all chasing price.
Yes, thank you. How is that NetApp doing? We should check on that real quick. Trying to put a little bottom in here, and then Dennis, I don't have it up. Where do you think Lumber Liquidators is trading at?
Oh, we should go back and just check out Lumber Liquidators here again.
Yeah.
$21 now.
21. It's down 5 points.
Yeah, a little bit.
It was down to 1888. That's incredible.
Oh, man. Well, one of the whole numbers held, I guess 19. But anyways, I just want to move on here, and I want to talk about a few other stocks. Alibaba. I don't know. Have we talked about that one with you much on the show? There was big.
Yeah, a little bit.
Go ahead. All right. I mean, are you a believer in this breakout here? Big news, concerning Yahoo. And then, both stocks kind of had a crazy movement. Now, Baba broke out here over that high from earnings day here. Is this one to chase, or do you think you get it coming back cheaper?
I've been in the camp that as long as price is above the October lows, you can own it. Below that, there's no reason to be in it. We're above the October lows, so I think it probably keeps going.
Okay.
That's been my level the whole time, and now that we broke out above there's two downtrend lines. You got the one from the November highs, and then you got the one from like the Thanksgiving highs. Which is a little bit of a more conservative trend line. So from the November 25th highs, if you draw a trend line all the way down there, we really broke through that yesterday. All longs can really raise their stops to that level. As long as we're above that downtrend line from the November 25th highs, you can own that all day. And I'd be taking profits, around 97. It's probably got about, 6-7 points to the upside.
JC, I want to pop back to your comments on interest rates and just talk talk the utility stocks a little bit along with that and some of these other dividend plays. Because if you think interest rates are potentially going to come back down here a little bit and not go up, do you like the utility stocks here? Because they've been absolutely killed as well.
Yeah, I mean, I wouldn't call them necessarily killed. They've done nothing for, 2.5 months. They've just been in a sideways range. So they haven't really gotten killed. I mean, they got killed in from the January high.
February, March is what I'm talking.
I wouldn't touch Utes until they can get out of this range. I mean, it's a very well-defined range, really, for the last 3 months. So if we can break out to the upside of this range, then yes, you can own utilities all day. And if I'm right on interest rates and interest rates do fall, there's probably a pretty high likelihood that utilities break out. So that's really what I would be watching. I wouldn't mess with it until then. I think we could be patient. You could put REITs in a similar category, right around this 200-day moving average. If we start taking out, look at IYR, we start taking out 77 and a quarter of the upside, you could probably get in there. If you look at telecom, another high-yielding space, all of these sectors are trading right around their 200-day moving averages. I would say telecom's probably the worst of the three. So I would, and again, it gets back to, why get cute? If I really think rates are going lower, just buy bonds and call it a day. Keep it simple, stupid. I get the whole derivative play, rates fall and, you buy the interest rate sensitive sectors and things like that. But I think they're just too messy. Other than utilities, they're probably the cleanest. Utilities break out, fine, you can own them. But in the meantime, keep it simple, stupid, own bonds. That's what I think. It's a good risk reward. You only want to own bonds above the lows of the week. So from a risk reward standpoint, definitely skewed in the bull's favor.
JC, we always ask you about what stocks we're talking about. What is on your radar? Do you have a couple specific charts that you like, a couple specific setups? What's on your trading radar for today or for the next little
while? Well, I've been telling you guys the last couple of weeks I've loved wheat. Absolutely loved it. We're up 10%, and in the futures market, I mean, that's a lot. So, we've done very well, and I still like it. I still think wheat keeps growing. I really like this theme, guys. I really, really do. In fact, last Thursday was the best day we've had all year. A lot of that had to do with, with wheat. So, I've been talking about it here on the show with you guys. I really like the space a lot. So, look at the agricultural space as a group. I've been mentioning that, agribusiness in particular. Look at the ticker symbol MOO, MOO, cleverly named, and then break down the components. Look at some of the names, the Agriums and the Tyson Foods of the world. These are really setting up in a pretty interesting way. There's a huge base in the agribusiness, and these are all, it's a pretty diversified group because it's agribusiness. So, any company that generates more than 50% of their revenues from anything that has to do with agribusiness. So it could be fertilizers or chemicals, or it could be the actual food products. So the wide range of names. So if you dig so there's the Market Vectors Agribusiness Index, and if you look up the components of that, it's probably a good way to to generate some ideas. That's what we call a top-down approach, right? We like the market, we're bullish equities, we like agribusiness, we're bullish on that sector, and then we break down the individual components and figure out the best way to express that given theme. So that's what we call a top-down approach.
What about Netflix here? I know the other day, I think we were talking about it, and you said it's going to 700, and I just kind of tongue-in-cheek said, well, it has to go through 600 first.
Next day it went to 600.
And that's the day that it went to 600. Now back in here, analysts still pumping up the stock here. Just moving freight train, stay away from it. What's your take on Netflix?
No, to the contrary. I told you guys to like it. I think it goes 700. Why would you stay away from that? I like it. I still think it goes higher. For sure. 600 was a good target. That was the first target based on the 61.8% Fibonacci extension of the last correction from last September down to January. That was exactly 600 to the penny. We've now exceeded that, and I think that we keep going. I think we head up towards 700, 720-ish.
You just went from 7.
Raising its price. I like that.
Chasing price higher.
No, I like that. And I want to ask you about Amazon. I don't know if we've asked you about
chasing price higher. I'd like it for weeks. I mean, there's nothing not to like. It goes higher. I tell you to buy weakness, but you rarely see it in this one.
JC, what about Amazon? Because I don't know if we've asked you about this one here before, and it obviously had the big gap and go off its earnings report, and it's been sitting here digesting that for the last month. Do you think this is one that could eventually catch a bit here as well?
Yeah, the level you want to watch is really the highs from early last year. Call it 409, something like that, 410. As long as we're above that level, right? You see the highs from early last year, late 2013, early 2014. As long as we're above that, I think you can own it. If you want to be a little bit tighter with your stop, the lows after the gap up, I think, early May 6th or something like that. Call it around 414. If you want to keep your stops below that, that's probably a pretty good level. So, between 410 and 415, that's really the key level. As long as prices remain above that, we want to be buying this, very aggressively, just because the risk reward is so much skewed in the favor of the bulls because the risk is so well defined. And as you guys know, that's really all I care about, is having a very well-defined risk. If the risk is fishy, like lumber liquidators, for example, anybody in that deserves to lose money this morning. Unless they're in the calls, that's this very standard, operating procedure. You take the risk, the gap down risk on something like that. You got to be able to accept that. In terms of Amazon, it's different. I think that the risk is much better defined. I think we'll go to 485. That's the target.
Okay.
Wow.
Just real quick here. Bet you targets on social. It's kind of pulled back then. What do you think of these social media stocks here? Take a look at the ETF here. I think you get a little bit of life here coming back. Maybe get your comments on that. And then Twitter made a new low for the move yesterday. Give us your thoughts on Twitter.
Yeah, well, the social as a group, like I told you guys, we hit our target last month, so there's been no reason to be in the entire group. We hit the target officially on May 16th, so over a month ago. So there's been no reason to be in there as a group, and same thing with Twitter. After the gap down, I told you guys, it's dead money for a while. Certainly has been. Can we get a pop? Maybe get some kind of mean reversion? Possibly. I'm not in it. I think in order to be in it, you really got taken out 38 and a quarter. We started taking out 38 and a quarter, maybe. You could put in a stop below that, and the risk can be pretty well defined, which like I said is really all that matters to me. But below 38 and a quarter, not really something we want to be in. Mess with. A lot of people got stuck in that, so they're just waiting for any strength to sell. The old. Just get me back to even sort of mantra that, hurts so many people, but I can totally see people just stuck in this and they just don't want to sell it because they're like, oh, well, I didn't sell it above 50. I'm not going to sell it under 40. That whole, completely backwards sort of mentality is just the way that we are as market participants. So I think that this stock has a lot of people stuck, and that's a problem. So I continue to stay away from this.
J.C. Parets, founder of Eagle Bay Capital, 10-year veteran of the markets, an avid technician, throws some fundamentals at us too. J.C., it's always a pleasure. I look forward to Thursday morning and talking to you. Have a great trading day. Have a great Memorial Day weekend. We'll be talking to you next week.
Always. You too, guys. Have a good weekend.
Thanks, JC.